The European currency held steady in early trading yesterday, supported by relatively upbeat data on business activity in the euro area. The manufacturing PMI improved slightly, beating the consensus estimate, but remained in contraction territory. The services PMI stayed above the 50-point mark, separating growth from contraction. As a result, the composite index rose to 52.3 in May from 51.7 a month ago. Statistics from the UK turned out to be mixed. UK manufacturing activity returned to growth, rising to 51.3 from 49.4 in April. The services PMI business activity index fell to 52.9 points from 55, which limited the British currency's bullish run. Later in the day, traders received data on US initial jobless claims, which came in slightly below market expectations. The US manufacturing PMI remained above the 50 threshold. The US services PMI business activity index surged to 54.8 in May from 51.3 in the previous month. Against this background, the US dollar gained value, with the euro and the pound sterling extending weakness. Today's macroeconomic calendar includes UK retail sales, which are estimated to have fallen by 0.6% in April. This comes as no surprise, as easing price pressures usually come with lower sales volumes. If the report turns out to be more downbeat, the British pound will lose more ground. Traders should also take notice of German GDP growth data for the first quarter of the year. The German economy is forecast to expand by 0.2% month-on-month in the first quarter of 2024. Compared to the first quarter of 2023, economists expect a 0.9% decline. In case of gloomy data, the euro will extend losses. In addition, US durable goods orders and University of Michigan's final readings on consumer sentiment and inflation expectations are worth digesting. Upbeat data will help the greenback continue its bullish run. What is more, Federal Reserve Governor Christopher Waller is scheduled to speak today. Given that Fed officials intend to keep interest rates elevated to combat inflation, as evident from the third minutes, his speech could back up the dollar. Now let's move on technical analysis. According to the 1-hour chart EUR USD, a false breakout at 0.796 will generate a buy signal, driving the price up to 1.0820. If the price breaks above this level and tested for the top down, the volume of long positions will increase further, with the euro climbing to 1.0842 and 0.861. At the level of 1.0861, I recommend going short on the rebound. Short positions at 1.0842 and 0.820 can be opened on a false breakout. A breakout below 1.0796 will pave the way to a deeper decline to 1.0772 and 1.0753, where it would be wise to go long on a rebound to catch an intraday correction of 20-25 pips. Going long at 1.0772 and 0.796 will only be relevant in the event of a false breakout. The British pound is also under pressure. To regain control of the market, bulls need to push sterling back to the 1.2700 level. If the price breaks above this level and tests it from the top down, the pound-dollar pair will have a chance to rebound to 1.2730 and 27.59. At the level of 1.2759, traders are advised to go short on the rebound, expecting a 25-30 pip move. Short positions at 1.2730 and 2700 can only be considered in the event of a false breakout. In this case, sterling is likely to dive to the 1.2672 mark. Its breakout will open the way to 1.2646 and even 2615, where it will be possible to go long on a rebound, counting on the intraday correction of 25-30 pips. Going long at 1.2646 and 2672 will only be relevant on the false breakout. Good luck and have a nice weekend.